Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for 65.tv, and here's a video I've wanted to do for quite a long time, and it's about DeFi Llama's offering and how it applies its metrics, or people apply their metrics, or how it sells its tools. Because I think so many things are distorted, and I think with the way these metrics are applied or interpreted, I'll actually make a bold statement and say, this moment in time, I'll say DeFi Llama is overrated. And in this video, I want to outline why I say so. And if you want to know more about that, please keep watching. And if you are not subscribed, please subscribe to our channel and click that notification bell just in case we drop some proper alpha that you may not want to miss, and it may also be time sensitive. And this content is also not financial advice. And if you do require financial advice, guys, you know what to do by now. You've been watching our channel. If you keep coming back, you've been watching our channel for quite a while, and you know we don't issue financial advice on this channel. And if you're from the UK, this content is not for you as well. If you want to know more, visit the FCA website where they can expand or tell you why they say crypto is not ideal for retail. It's high risk. Just sharing what we are supposed to share, guys. Coming back to DeFi Llama, the leading open source analytics platform for decentralized finance, or DeFi. In this video, we are going to evaluate DeFi Llama as a platform for the value offered to its users, the key metrics, and the validity and pitfalls of commonly cited indicators like TVL, which is total value logged, followed by a rationale-driven breakdown of what is truly fit for purpose for DeFi analysis. So let's start by giving an overview of what I think DeFi Llama aggregates on-chain data to provide you, part of its analytics. You got TVL, or total value logged, you got DEX trading volumes, lending and borrowing stats, airdrop eligibility and token emissions, stablecoin supply, yield and API trackers, bridge activity, and protocol revenues and fees. DeFi Llama is non-custodial, neutral aggregator widely used by both institutional analysts and retail users to track DeFi performance. And here's a quick brief of some of the key metrics. Let's start with TVL, the most commonly used metric. Now, TVL refers to total value locked. The total amount of assets typically measured in USD deposited in a DeFi protocol across smart contracts is what is referred to as TVL, or total value locked. And the pros of looking at TVL as a metric is that it is easy to understand, metric of capital utilization. It is a useful proxy for protocol adoption or market share in a specific vertical, for example, lending or DEXs. It helps identify growth trends, TVL inflows and outflows, and layer dominance. For example, Ethereum versus layer 2s versus Solana. TVL would be ideal for that. But here are some of the disadvantages that people don't actually tell you, that this could be a weak metric to use. TVL can be gamed. What do I mean by that? Protocols boost TVL via liquidity incentives or secular deposits. For example, deposit to borrow and redeposit borrowed assets. That increases TVL, and we know which chains or protocols do that. TVL doesn't account for revenue or user activity. High TVL is not actually equal to usage. That's something you need to consider. So high TVL doesn't mean anything apart from it being a useful proxy for seeing if the protocol is being adopted, but it doesn't really tell you if it's being adopted, because it might have high TVL, but that TVL might be a result of it being gamed, where protocols are using liquidity incentives, where people deposit or borrow and then reposit those assets. So those assets are being double counted. Therefore, high TVL is not always equal to usage. You need to be aware of that. Or if you hear someone talking about TVL, you know what to say or to think about that now. And TVL is also not normalized for token volatility. A falling ETH price, for example, could shrink TVL even if usage is stable. Okay, that's quite possible. So if the price of Bitcoin falls, the TVL in terms of USD for, say, the Ethereum network would fall. But that is not due to the fundamentals for Ethereum itself. It is down to external factors. So do you really think TVL is a good metric to use for analytics? I don't know. I'm not sure. Is it fit for purpose? I think partially, but you can't overly rely on it. Like we hear some people preaching TVL as if it is the golden yardstick. TVL is useful for liquidity depth, not protocol quality or sustainability. It should never be used in isolation. So for those who are crazy about TVL, my chain is bigger than your chain because of TVL, this is for you. Be careful when you are preaching to people, especially those who are not in the know. You need to be responsible. Next, you got fees and revenue. Transaction fees are accrued by the protocol and optionally shared with token holders or treasury. That's what we mean by fees and revenue here. So the pros for fees and revenue as a metric that comes as part of DeFi Llama's analytics. It is a direct measure of economic activity and value capture, more aligned with token holder value, especially in fee sharing protocols, the likes of Hyperliquid and so forth. It allows for fundamental analysis akin to earnings in equity valuation. That is on the pros. What about the cons or disadvantages? Many protocols burn or retain revenue, so not always accessible to holders. So it might have revenue, but that revenue is not accruing to ecosystem participants, the wider ecosystem that is. And fees and revenue Revenue can also spike due to gas fee volatility without reflecting increased volatility. We know where that is coming from, right? You know, the likes of Ethereum during the crazy days, the gas wars of 2021. Again, people were still talking of fees and revenue, but they were not talking of that. I mean, if it's the likes of Solana killing it in terms of revenue and fees, you know it's genuine because Solana is cheap, but there might be something else behind that. You always need to be aware of that. So is fees and revenue as a metric to measure performance of a chain or protocol a fit for purpose metric? Well, I personally think yes, highly so. Revenue is one of the most substantive metrics for evaluating protocol health and evaluation. So if a chain or protocol is generating plenty of revenue, it's most likely going to be sustainable. But also bear in mind that that revenue might not be accruing to token holders. Is something you need to keep in mind. Moving on to the third metric, which is user activity or daily active users, transactions, and wallets. That's another misused metric, and it comes from what DeFi Llama have been doing as an independent aggregator. So this metric is referring to the number of unique addresses interacting with a protocol, and the pros include the reflecting actual demand and adoption. It helps distinguish between capital-intensive protocols, that is high TVL low users, versus high-velocity ones with low TVL and high users. It is useful in token incentive models or modeling, for example, real versus CBIL wallet. That's on the pros. And on the cons, it's easy to spoof through bot activity or airdrop farming. Very good point. Wallets or number of wallets is not equal to number of users because, for example, I have multiple wallets for Ethereum, I have multiple wallets for Cardano, multiple wallets for Polkadot, multiple wallets for the Solana ecosystem, for Avalanche, and so forth. So the number of wallets doesn't necessarily translate into the number of users. I might hold those wallets and I might just be doing some DeFi things, but it's still just me. It doesn't mean it's many users doing that, okay? So when it comes to that, I think it's very hard to disambiguate one person from multiple wallets. Like I just said, I demonstrated. I hold multiple wallets, both cold wallets and hot wallets. So is user activity, that is daily users, transactions, and wallets, a good or a fit for purpose metric to use when you're analyzing a chain or protocol? I think yes, but with some caveats, okay? It is a good proxy for engagement when combined with filters to detect CBIL behavior. But then those CBIL behaviors sometimes do get extended to areas where they should not be applied to. You know what I'm talking about. I'm talking of airdrops and all that. People end up doing crazy things and they end up losing traction. There are certain chains or protocols I don't engage with anymore, and I sold most of my assets because of this CBIL application where they sidelined their supporters from a long while because they introduced some of these parameters long after they've introduced or they've formed engagement, and it doesn't work. So people just get disgruntled, annoyed, and leave. I've done that with a few protocols as well. That is something to consider when you're looking at user activity, okay? Moving on to the fourth metric, which is token emissions and or incentives. Here we are talking of tokens emitted to bootstrap liquidity, staking, or usage. The pros for this metric, it is critical for understanding tokenomics and inflation pressure. It also helps predict sell pressure and sustainability of yield farming program. What about the cons? Poor visibility in some protocols, for example, undisclosed emissions. These are teams doing dodgy stuff. It is also misinterpreted as free money without adjusting for price impact and lockups. It is not free money, okay? Is it fit for purpose? I think yes, it is. Mostly, especially in modeling net real yield and treasury health. It is a useful metric, token emissions and incentives. The next one is stablecoin inflows as a metric from DeFi Llama. And this is referring to net inflows and outflows of stablecoins by chain or protocol. Those with stablecoins, of course. The pros, this tracks real capital movement, largely from off-chain to on-chain or between chains. It also reflects market confidence, especially during volatile periods. What about the cons? Well, it doesn't reflect usage. For example, holding in wallets is indistinguishable from protocol use. Chain-specific metrics can be skewed by bridges or roll-ups. That's another reason why it is not a reliable metric to use. But that is just the disadvantage. Is it fit for purpose? Because that is what we're looking at. I think it is very useful for understanding macro sentiment and capital positioning. So if you know how to play that game, stablecoin flows is a metric you want to be tracking or using, okay? Next, you got airdrop trackers and emission farming tools. And this is referring to community tools to fund potential airdrops, estimate claimable value, and track farming opportunities. The pros, this metric helps early adopters identify asymmetric opportunities. It also supports transparency in airdrop fairness and eligibility. What about disadvantages or cons? It can promote CBIL abuse and over-incentivize short-term interaction. Yes, that is a valid point. If you are like me, you probably have come across that where the CBIL has been abused and they were over-incentivizing their loyal supporters, not realizing you also need to build out of your loyal supporters support, because the level of support might only be there for a short period because they are being given incentives. You need to generate interest outside of that. We saw that with most layer 2s. You're talking of Blast, so many layer 2s that did that. I think the one I would say was within reason was something like Arbitrum. I think Arbitrum was somehow fair, but the others, your Blast, that was not fair. I don't think they were prioritizing people who were just passing, because if you rely on people staking, as soon as that event finishes, all the liquidity leaves. That happens and people dump their tokens on the market. Maybe that's what the team is after. I don't know. Instant success but lack of sustainable growth. So is airdrop trackers, emission farming tools fit for purpose as a metric? I think for speculators, yes, like we just highlighted in some of the examples I gave. For assessing protocol sustainability, not really. It does not prove anything. It's just for speculators. So speculators can benefit from that, but people wanting to establish the sustainability of a project, whether it's got the staying power, this is not a good metric. So you can see so far, I can see it's a mixed basket. So what metrics are not useful? I think token price. Why? Because it is too volatile. It's a lagging indicator and influenced by speculative sentiment, not fundamental. So you almost want to invest in projects with price that is lagging activity and fundamentals. Why? Because price will catch up. TVL rankings by themselves or by itself, this doesn't reflect user engagement, revenue, or sustainability. So people who keep bleating about TVL, this is not a useful metric at all for investors or anyone for that matter. Okay, it's a vanity metric, but it does not bring anything substantive to the equation. What about daily percentage change in TVL or fees? It is noise heavy and often due to external volatility, price fluctuations, gas spikes, whales, moving funds, all those things, they do affect TVL or fees. So I don't think it's a useful metric either. So we've got three useful metrics: token price, TVL rankings, and daily percentage change in TVL or fees. They are not useful. Okay, you need to average it to say monthly or something like that, but not daily like this. So what are the most fit for purpose or most useful metrics then? We're going to go with objective and the best metric. So if you are looking for long-term protocol value, you want to look at something like fees, revenue, user activity, and net emission. You want to look at them. And if the objective is real usage and traction, you want to consider unique users, stable flows, and active contracts. Active contracts, you want to look at them. And if the objective is that of liquidity and depth of market, well, TVL only relative within a sector, open interest, for example, for DEXs, okay? And if you are looking at token valuation, it's revenue to valuation ratio, emissions curve, and treasury health. That's what you want to look at, token valuation. At the moment, without supporting or promoting any project, if you look at the likes of BIM with the health treasury, if you look at the poor tokenomics and token allocation, but the likes of GANs, the token, but if you want to value the token, you know. Personally, I think those two are undervalued. Why? Because the niche itself, gaming and NFTs, and to an extent AI, they are extremely undervalued from my point of view. So I know while prices are collapsing, value keeps accruing and the treasury is strong. So what do I do? Not financial advice, of course. I keep pressing the buy button whenever I get an opportunity for the likes of BIM, the GAN token, and so forth, because I know the value is accruing, the price will catch up. And if the objective is incentive sustainability, then I'm looking at yield adjusted for token emissions and actual fee share. So you're talking about especially Hyperliquid wedge sharing fees with this community. I don't know with Uniswap what you decide to do, but the Uni token, if they decide to start sharing token revenue, then maybe things will change for the Uni token. Because I think Uniswap is being sidelined by what's happening at Hyperliquid, but I'm sure at some point they are going to introduce perpetuals on Uniswap. If it's not there already, they are going to introduce that very soon. So that's my thoughts on the metrics that come out of DeFi Llama. Some of them not useful at all, especially the ones people place importance on. Some of them are just not helpful. Token price is not. TVL rankings by themselves, they are not useful. And daily percentage change in TVL or fees is not useful because things change over time, periodically. So you need to identify the right metrics and use them faithfully, responsibly, and carefully. Faith, responsibility, and care. Okay, don't drop the ball now. So my final thoughts is that DeFi Llama is a vital, transparent data layer within the DeFi space, but like any tool, the insight quality depends on the context in which metrics are interpreted. For example, TVL is overused and oversold as a single indicator. Use it as a proxy for liquidity, not for health or revenue. Next, you got revenue, fees, and emissions data that are far more grounded for comparing protocol economics. economics, yeah, you can use that. You can use the revenue, you can use the fees, you can use emissions. You want to compare protocols. Then you go to wallet and usage data. While flowed is useful when cleaned or cross-referenced. And contextual analysis, for example, stablecoin inflows, bridge flows, cross-chain usage, makes DeFi Llama especially powerful in the hands of a thoughtful analyst. But it's hard to come across thoughtful analysts nowadays. Anyway, guys, those are my thoughts on DeFi Llama and some of its key metrics. Let us know what you think in the comment section. If you use DeFi Llama metrics, let us know which tools do you actually use for analyzing different things or different protocols or different projects. Let us know in the comment section. I do use DeFi Llama from time to time, but like with many people who are hungry for knowledge, I'm always refining how I apply some of these metrics and some of these tools. Let me know which one is your favorite tool on DeFi Llama. Until the next one, guys, this is FD for 65.tv signing out for now. Bye.